Hello and good evening friends, welcome to a new episode of Investing Fool. In today's video, we will talk about auto stocks, the auto pack as a whole, what they have been doing, what they have been doing to our portfolios. We'll specifically take a look at Bajaj Auto as well and some other things about the markets in general and the portfolio in general. So before we get started, if you haven't subscribed to this channel, please consider subscribing. And just to remind you, none of this should be taken as financial advice. Please do your own due diligence and this is for educational purposes only. So where are we in terms of the overall market? So if you take a look at Nifty, we are where we were 2 months ago, and we had gone up higher, but then we struggled to maintain over the 25,000 level, and we have lost 5% from the top. In the short term, we do not know where we are going to go, obviously, but in the medium to long run, I still think that the bull run should sustain itself, even though we may be due for a time wise correction for a few months maybe, or maybe a slight bit down than where we are currently. In terms of auto sector and why we are talking about Bajaj Auto, first of all, Bajaj Auto is the only auto stock in our core momentum portfolio. Well, it's one of two auto stocks, but the other stock is Motherson, which is the auto ancillary. So probably we can discount that for this discussion. And Bajaj Auto, if we look at the stock, so recently it declared its Q2 results, and the stock was hammered 13% on Thursday, and that was its worst single day decline since March of 2020, which was the COVID period, right? So that gives you the amount of fall that it sustained on Thursday, and it is down now. It is down around 21% from the all-time high. The right side chart is not about Bajaj Auto; it's about the Nifty Auto Index. We'll talk about that in a minute. So what is the issue with Bajaj Auto? So I'm not a fundamental analyst or an investor, but what I've gathered from reading analysis and opinions about the Q2 results, it's that the results per se were not bad, but it's more of the pessimistic outlook, or the muted demand that the management has indicated in its commentary. That is what is spooking the market. So we have been hearing the usual story of consumer demand being muted in India, at least in the non-premium segments, right? And that is the same thing that has been plaguing auto. So the numbers that the management reported for, like, the management anticipates for the upcoming quarter, which includes the festive season sales, right? Those are much weaker than what the market expects. And when the market is confronted with this kind of information, that I mean, you have been staying at very lofty valuations, and then you give a guidance of a 1 or 2% growth over the next quarter, then obviously stocks are going to get hammered down, and that is what we have seen in the prices of many of these stocks. So it's all a story of growth and valuation. As long as the growth is coming for a company, right, no one cares about insane valuations can keep getting from a little bit insane to more insane to more insane. As long as growth is coming, jab tak growth chal raha hai, no one gives a damn about valuation. The moment growth the moment the market sees that the growth is plateauing or the growth is peaking or things are going to be rough for in the immediate term, then the correction starts and everyone starts getting worried about insane valuations. Because the market, you have to look at it, the market is always discounting the future, right? So the moment it sees some red in the future or some pessimism in the future, that will get immediately reflected in the stock price, and that is what has happened for Bajaj Auto and many of its peers also. There was another concern also that Bajaj Auto may be ceding some market share in the 125cc segment, which is one of the most popular segments in the two-wheeler market. And this is not just the problem with Bajaj Auto, like even TVS Motor and Hero MotoCorp, all three of them have actually lost a bit of share in recent times to Honda. But again, this is a short-term data, so there is no guarantee that in the long term also this trend is going to continue, right? If we look at the auto sector as a whole, and this is the Nifty Auto Index chart that you can see on the right hand side. You can see this red line, right? It denotes here we are like in around the middle of June, and now we are in the middle of October. So for 4 months we have had 0% returns. And if we go back to our core momentum portfolio sheet. By the way, anyone who is watching our video for the first time, this sheet, all the stocks, whatever we hold, whatever we exit, when we buy, when we exit, what price we buy, what price we sell, everything is here. It's public, it's live all the time, so you can I mean, check it out for fun, for exploration, whatever. But in on this sheet, we were going to focus on the sectoral and other indices tab. So on this tab, we have the historical performance of different sectors. So if you look at the 1 week change, this big red rectangle, that is Nifty Auto, the worst performer in the last 1 week. And if you look at the 3 month performance also, the 3 month performance is negative, right? That is does not really bode well for the sector. But if you look at the 3 year performance, right, look at the 3 year performance, it is in the top three performing sectors. So CPSE is followed by PSU Bank, followed by auto, right? Even in the 5 year period, right, when we look at the 5 year period, it's still the fourth top ranked sector in terms of performance for the last 5 years. So uh, in the long run, like in the recent past, for multiple years, auto stocks have been doing really well, and valuations have continuously inched upward and upward and upward, right? And when I'm not saying that the cycles are turning right now, I don't have any expertise on that, but when the market sees that times are going to be rough for a foreseeable term, right, no one is talking that the Q4 recovery will be very quick or something, right? I mean, no one is discounting that for now. So when the market starts expecting this, then I mean, the outlook for the sector as a whole looks a little bit muted for the short to medium term. And if we look at other consumption baskets, right, FMCG and consumption have also been the worst performing sectors in 1 month. So if we look at the 1 month change here, so the worst performing sector is FMCG. This also, this also gives an indication that consumption, the demand, at least in the mass consumption segments, they are not as good, or they haven't recovered to a level that the market anticipated. You have Nifty FMCG as minus 5.5%, consumption at minus 3.6%, and you have auto at minus 2.6%. So none of these sectors are looking very good, right? Now let's take a look at Bajaj Auto. So what's the story of Bajaj Auto in our portfolio? Bajaj Auto has completed 8 months in our portfolio. So we bought the stock in mid of January earlier this year, and it has stayed on for 8 months now. The gain was almost like 61% at the top, and then we lost quite a bit of ground to where we are now, and currently I guess we are at around 35%. We are at 37.6% currently, right? So we have lost quite a bit of ground. And if you look at the chart, it has breached the 50-day moving average. The stock is down 21% from the top, as we said. And the ranking on our momentum screener, so we use the Momo India screener that we frequently discuss about, and the ranking has gone down from 12 to 68 in just 1 day after Thursday's move, right? So that's the kind of impact that it had on earnings. Obviously, when you fall by 13%, it's quite a bit. And but obviously we will adhere to the strategy. We will see how the stock performs over the next couple of weeks. By the next rebalancing, if the stock stays here, then it is very likely that that Bajaj Auto will get kicked out of the portfolio. And as I discussed, the issues of consumption and muted demand, right, they apply to the sector as a whole. So these are sector wide headwinds that may take a little bit longer to recover. They may not recover very quickly. So that is something that we have to keep in mind. And if Bajaj Auto goes, like if I had to rebalance today, for example, then if Bajaj Auto went out of the portfolio, I think I checked the screener, probably Sun Pharma or Divi's Labs was going to come in the portfolio, right? So if that happens, if those stocks maintain the same trajectory, the weight of pharma, which is at 5 stocks out of 21 stocks right now, that might increase even further, right? And look at the trajectory here. Bajaj Auto we have bought here, and it showed pretty consistent growth upwards, and recently it has like lost a whole bit of ground here, right? And that is something that you always need to be prepared for. Sectors will typically go out of favor in when like there are sectoral headwinds, then all of the stocks will be kind of impacted. Let's take a look at some of the auto stock charts here. So we have TVS Motor on the top left here, Eicher Motors on the top right. These are the two wheelers, and we have Mahindra and Mahindra on the bottom left and Tata Motors on the bottom right. These are the more four wheeler oriented players, right? So if we look at what time the stocks have spent without any overall movement in recent times, so TVS Motor has not done for anything for 2 months here. So we are where we were 2 months ago. Aisha Motors has not done anything for 5.5 months. Mahindra and Mahindra has not done anything for 4 months. Tata Motors has not done anything for 8.5 months, right? But if you look at, even with this kind of like horrible or stagnating momentum in recent times, even with this, you look at the 1 year returns of these stocks, the minimum you can find is 32%, right? So 1 year return for Aisha Motors is 32%, TVS Motor is 65%, Tata Motors is 37%, and Mahindra is 89%. Even after spending like 4 months, 5 months, with price going nowhere, the 1 year return is so super, right? If someone gives me a guarantee of giving like 32% return, I would just take it straight away. So that's the minimum in this cohort, right? So auto stocks have been doing pretty well for some time, and that's why they have been coming in our momentum portfolios as well, right? We had I think TVS Motors we had in our portfolio. It didn't do much for us. Aisha Motors we never had. M&M is there in the nifty top 10 portfolio. Tata Motors was there in our core portfolio. We exited with a profit, and Tata Motors was there on the is currently I think also there on the nifty top 10 portfolio as well. We'll take a look at it in some time. But overall, you can see that the kind of growth that these stocks were showing in the past, they have somehow slowed down, and that gives you sort of an indication that the sector may be cooling off a little bit in the short to medium term, right? And when when this happens, right, your strategy, whatever you are using, should be able to move from one sector to another, wherever, like whichever sector is showing relative outperformance in the in the recent terms, your portfolio should be able to switch to those kind of sectors, right? So when the next rebalancing comes, if Bajaj Auto, like this kind of trend continues, Bajaj Auto will get kicked out of the portfolio, right? So whatever gain we will have with it, and we will let it go, and we'll take some other stock from some other sector, hopefully. So momentum as a strategy is a self-correcting strategy, right? So it always tries to pick the winners, and if it feels that something is slowing down, something is losing momentum, that it would kick those stocks, those sectors out of the portfolio, and it would bring in some fresh entries which are more likely to outperform. Obviously there is no guarantee, right? So if we look at the Thursday's fall here, so Bajaj Auto was down 13%, and that's that summed up Thursday, right? There was you could not see anything else in the portfolio when one stock is like down 13%. And in recent times, I remember Granules was down 16-17% on the day there were some FDA reservations observations against the company. Portfolio was also down 2.2% on Thursday. And let's take a look at the portfolio, what we have been doing. So from having around 8% post-tax alpha, we have around 6% post-tax alpha. And today Inox Wind was up 4.5% in terms of the winners. MCX was up 3.7%. Zomato was down almost 4.5%, because there was some news around some QIP for Zomato. There is some renewed fundraising requirements for Zomato, so that probably had its bearing on the price. And if we look at the Nifty top 10 portfolio, we had an alpha of around 7%. That has changed, that has been decreased quite a bit to almost 3%. That is because the auto pack, again, I've been talking about the auto pack. So you see there are 3 auto stocks in our Nifty top 10 portfolio. So Bajaj Auto is down 21% from the all-time high. Hero MotoCorp down 17% almost from the from the all-time high, and Mahindra down 8% from the all-time high. So all these stocks have lost ground, and that is why. But they still, because of their previous performance, they still feature in the top ranks as of now, right? So. So yeah, it may take some time for this strategy to adjust to the new reality. If auto is not going to perform for some time, then these stocks would gradually have to go out of the top 10 portfolio as well. But yeah, that's pretty much it for today, guys. If you like this video, then please press the like button. If you haven't subscribed to the channel, then please subscribe to the channel, and I'll see you in the next video. Till then, have a good day. Bye bye.